Hello everyone, welcome to my channel Scholar Scrub. Today we will be discussing about how to prepare trading and profit and loss account and balance sheet. For the trial balance we have prepared in our last video. In our last video from our ledger books we have prepared our trial balance, and in this video we will be seeing how we will prepare trading and profit and loss account from this trial balance. See, this is trading and profit and loss account for the year ending. Generally the year ends at December 31st or March 31st according to the calendar year or the financial year which the company follows. See, now we will see how we will prepare trading and profit and loss account from this trial balance. We have two sides in the trading and profit and loss account, as every account has debit side on the left, credit side on the right, and these are the particulars and these are the amount columns. To start off with, on the credit side we will be starting with two purchases because we will be dealing with trading account first. Trading accounts deals only with the trade which has happened at the factory or the industry, and profit and loss account looks at what happens at the office. So to start off with the trading account, we will be having purchases on the credit side, on the debit side. So write two purchases and the amount is 97,500, and we have to check whether we have any purchase returns. Yes, we have purchase returns of 5,000. So don't write the amount directly into the amount column. Write the amount in the inner column as 97,500 minus purchase returns of rupees 5,000. So the amount will be 92,500. And let's check, do we have any other things on the debit side which has gone, which has our money has gone out? No. Now we'll move on to the credit side where money has came in with the sales. So on the credit side write by sales, and as the same we have done for the purchases, just look out for any sales returns here. Yes, rupees of 1,000 was returned. So by sales we have earned 1,58,000 minus sales returns, the amount of 1,000. Total will be of 1,57,000. And let's look at the account whether there are any things which has to be mentioned in the trading account. No, only these things will be happening in a factory. If anything like wages or electricity at the factory, if it is given in our trial balance, we will be writing it in trading and profit and loss account because they happen at a trading place. So these are the entries will be given in trading account. So we will be closing our trading account as same we have done how to close ledgers. Same has to be done here. The amount of 1,57,000 is highest, so balance the account with 1,57,000 on both the sides. So it is, we have earned an profit here. So this is called as gross profit. This is called as gross profit because we are yet to calculate many other things in the profit and loss account, so we call it as gross profit. The amount of 1,57,000 minus 92,500, that will be 64,500. Yes, 64,500, and this ends the trading account. Now we will be moving to profit and loss account, where all the incomes and expenses are calculated here to find out the net profit. So as we said, on the debit side, write our expenses or normal expenses which have happened in our trial balance to stationery. So to stationery, we have incurred 3,000 rupees. Next, to rent, we have paid a rent of amount 5,000. And let's check, do we have any other things which have to be debited in this trial balance? No. So let's move on to credit side. On the credit side, we have got a gross profit of 64,500. So we'll bring this down here by gross profit. We have got an amount of 64,500, and let's look any amount which are our income, which have to be written on credit side. The commission was our income, so write it on the credit side by commission, the amount of rupees 4,000. In the same way, now it is a time to close our accounts because we have nothing more to enter in this trading and profit and loss account, because all the other things which are remaining in our trial balance are assets or liabilities which have to be entered in our balance sheet. So we'll close these accounts in the same way. This comes to 68,500, and we have to balance the accounts with the amount of 68,500 on both the sides. Close the accounts with the amount of 68,500 and calculate the net profit. So it is, as the credit side is more, that will be a net profit. To net profit 68,500, and this comes to 8,000. 68,500 minus 8,000 is 60,500. So we have ended up with the profit of 60,500. So this ends our trading and profit and loss account, which has to be prepared for the year ending. And now we'll use this net profit in our balance sheet. Now this is our balance sheet. Balance sheet as on. See, balance sheet will be prepared for a particular date. Balance sheet is a statement which will give us our position. So this will be prepared at a particular date, and trading and profit and loss account will be prepared for the whole year, and the year ends at a particular date. So this is the pro forma of the balance sheet. Liabilities on the left, assets on the right. So now we'll discuss about liabilities and assets, and we'll just pose them into these liabilities and assets according to our problem. The first liability is our capital. Yes, capital is the money which is brought into the business by the proprietor. So capital is a liability. Capital is a liability because the books of company and owner will be written separately. So the capital is bought in by the owner. So the company is liable to pay the owner the amount of capital. So write capital, don't write the amount directly into the outer column, we'll be adjusting something. The capital of 3 lakhs is what? So write the amount 3 lakhs in the inner column, and I have said we will be carrying our net profit into our balance sheet. So just add our net profit to our capital amount. So that is 60,500. That leads to 3,60,500. And now we have added our net profit to the capital, but there is something which we have done in our business, that is drawings. See, drawings is done by the proprietor, so he can draw only from the amount which he has bought. So the drawings has been done and it has been not affected anywhere in the trading and profit and loss account. So this has to be deducted from the capital minus drawings, the amount of 4,500. So this leads to the total of 3,56,000. This is the capital. So we have done with entering the capital into our liabilities column. Now we will be writing about others in our liabilities, such as sundry creditors. We can talk about non-current liabilities and current liabilities. Current liabilities are something which they are covered off within 1 year, that is 12 months, or non-current liabilities are something which they take more than 1 year to be covered off. So for as this is very small sum, we can't take them into current and non-current. I am writing them directly here. Our next liability will be sundry creditors. Sundry creditors in the sense Mr. S. Mr. S is our sundry creditor with the amount of 65,000. So we can't write the account of Mr. S here, so we will use the word of sundry creditors. Generally Indians use the word sundry creditors. Sundry creditors, the amount of 65,000. And now we have got our bank account credited with 4,000 in our trial balance. Actually, bank account, the cash in bank should be recorded as an asset in the asset column, where we write cash in hand and cash in bank as our current assets. But here bank account is credited, not debited like cash, because we have taken an overdraft from the bank, because we only had a little amount in the bank, but we have withdrawn a lot this amount from our bank. So we will consider it as bank overdraft. That means bank has given us an amount to use as we are giving some business. So write it as bank overdraft, the amount of 4,000. Now look at these accounts. We have done with the liability side, and we have to do with our asset side. Coming to the asset side, first we will be looking after the fixed assets. We can write our side heading here as fixed assets. There are only few fixed assets in our trial balance. They are machinery and furniture. So directly write them: machinery, the amount of 1 lakh, and furniture, the amount of 15,000. These are our assets. And next we will be moving to our current assets. As the same, the time will be using the time frame to consider these as current or fixed assets. Current assets, in the same way as the current liabilities, they will be converted into cash in less than 12 months. Fixed assets, more than 12 months. That's the main reason of considering into fixed assets and current assets. The first asset in the current assets is our cash in hand. Cash in hand, the amount of 3,08,000. Cash in hand is a current asset. And next, we have only one account left from our trial balance, that is Mr. Pawan account. He has a debit of 2,000, so we call him sundry debtor. As we call Mr. S account as sundry creditor, here we will be calling Pawan account as sundry debtor. Sundry debtor, the amount of 2,000. Now just look at our trading and profit and loss account and balance sheet and our trial balance. We have covered up every account from our trial balance in our trading and profit and loss account and balance sheet. Just look at this. Cash account we have written here in current assets, capital account in our liabilities, machinery account in our fixed assets, purchases account to purchase in trading account, sales account by sales in trading account, Mr. S account as sundry creditors, purchase returns account we have minus here, bank account we have written as bank overdraft, Mr. Pawan account as sundry debtors, stationery account in P&L account on debit side, commission account on the credit side of P&L account, sales returns we have minus from sales, commission we have written it on the credit side of the P&L account, rent account in the P&L account debit side, drawings we have subtracted our drawings from our capital, furniture we have mentioned in the fixed assets. So we have entered all our entries from our trial balance in our trading and P&L account and a balance sheet, and now we'll sum up the both sides. Summing up of both the sides gives us a particular amount of 3,56,000 plus 65, 3,60,000, 3,60,000 plus 65,000 leads to 4,25,000. 4,25,000. On the asset side, same 3,08,000 plus 2,000, 3,10,000 plus 1 lakh is 4,10,000. 4,10,000 plus 15,000 leads to 4,25,000. So our assets and liabilities and assets in our balance sheet are balanced, and the word balance sheet is justified now. The amount of 4,25,000 on both the sides. So from the trial balance we have prepared our trading and profit and loss account, and from the net profit we have earned from the trading and profit and loss account, we have transferred it to balance sheet, and we have balanced our balance sheet. Both the amounts on the liabilities and assets are tallied. So this is how we'll prepare our trading and profit and loss account and balance sheet from our trial balance. This is a very small problem which I have solved. In the next video we'll be preparing profit and loss statement and balance sheet according to the Companies Act 2013, and in that video I'll be showing a huge problem for preparing with the working notes, where we'll be getting some adjustments for the problem. In the next video we'll be doing with our profit and loss statement. As profit and loss account is faded out now from the business point of view, everyone is following the Companies Act 2013, where they prepare profit and loss statement and balance sheet, and profit and loss statement and balance sheet are changed. They won't look like this. They'll have a vertical pro forma. We'll be discussing with a huge problem with lot of adjustments in our next video. This comes to the end of this video. If you like this video, please click on like button and please subscribe my channel. Thank you.